everybody. This is Dan Sheridan. Welcome. It's Friday the 13th, and you have a lot of earnings starting. The earnings period is starting out. Today, a lot of the bank stocks, and they've come out a bit negative. So the SPX, which is down about 14 points, was down maybe 30 or something, and stabilizing now. VIX is at 18, near 1847. I think first time in the 18th since Christopher Columbus came to Chicago and bought his first hot dog at Portillo's. It's been a while. At least in 22, we really haven't. The low, the 6 week, the 2 month range in the VIX has been about 19 to 26, 19 to 27. So this is the first time we've kind of dipped into the 18s. What does it mean for you? It just means a lot of the inflation news is slowing down a little bit, but more, if you look at the SPX chart here, the answer is we've been range bound. Markets, the last 6-7 weeks, market's been range bound. That will take the VIX down. The fear index, not much fear when you're range bound. Today, I'm going to talk just a little bit about butterflies. Butterflies are free. They're not really free, but here's the gist of it. We use butterflies for weekly and monthly income. And here's an example of a balanced butterfly Feb 3. So that'd be 21 days out for this particular example. Do I always go 21 days out? No. We do a lot of 15-day butterflies, and we do quite a bit of 30 or 40-day. It's good to diversify. But if you look at this, what is this? As you do a butterfly, I'm buying one, a 3,900 strike, and I'm selling a 3,970. So this butterfly is made up of two components. The first component, and this is calls, is a call vertical debit spread. What I have up in front of you, live, not Memorex, is a call vertical debit spread. And I'm selling the at the money, basically, 39.70-ish, that has the most extrinsic value. So that will decay more than my long in the money option. And then combining with a call vertical debit spread, do a call vertical credit spread, where I'm selling the same short as I did with the debit spread, right? And there's 70 with, right? Between my short strike and my lower strike call, 3,900. And then we'll have 70 with between my short of the call vertical credit spread, 39.70 and 40.40. So when you have equal distance from the short to both of the longs in the money and out of the money, this would be puts. That's called a balanced butterfly. But when you do a balanced butterfly, they're great for more of a downtrending market. It's probably been our most popular and successful strategy in Sheridan Mentoring in the last year. Because you can see, if you look at this T+0 line here, the purple line, the blue line, or whatever that color appears to you, is the expiration graph. But as you go down here, you can see the purple number, which is today, the T+0 curve, it stays positive. You can go beyond the expiration break even, as Roberto Duran said to Sugar Ray Leonard, no mas, no problems, right? Why? Because you're a little bit delta. So even though the short Vega, that's a strategy that would, if the market goes down, volatility goes up. So it wouldn't be so good from a volatility point of view. The deltas, you're just a little bit short. Delta 1.81, you'll be fine on the downside. But on the upside, you could see things get negative relatively quickly. So you'd have to adjust earlier. So that's a balanced butterfly. And then, so what do? A lot of times, if I don't have a little bit of a bias, really this isn't that non-directional. It just means, or that directional just means I have to adjust a little bit earlier. So what would I do to get the deltas more flat? Take my upper call strike and come down 5 points. And so now I replace my upper strike call of 40-40 with the 40-35. So now my distance on the upside is 65. So I call that unbalanced butterfly. It's going to cost a little more money, and I'll have less risk on the upside, more risk on the downside. So by doing a 70-65, my deltas are going to get pretty close to neutral. And in a $4,000 vehicle like SPX, I keep it within one delta or a little more than that. Either way, that's relatively flat, as I would call it, meaning I'm not. It's neutral. So it costs about $13. That's what I would do on a day like today. This type of a butterfly, just a little bit short. Half a delta short, it gives me about 3 weeks out, and I'd center it close to at the money 39.70. So that's something to think about if you're not familiar with that. One thing I want to show you, if you go to, for a second, Sheridan Mentoring website, here I am, and if you click on the top, online classes, just want to show you something. Online classes. And if you look here, we've got this thing. It says all weather butterfly. This is an on-demand class I just did around Christmas. And really, this is the first time. We do a lot of butterflies in our community over the last 15 years or so or more. And this is an all-weather butterfly program. So no matter what, this is the first time I've done something that no matter what the volatility level, if it's within our range, like we don't trade if the market's, a range-bound trade, we're not going to trade if the market's going nuts. But if the volatility is within our 6-week or 7-week range, you can trade a butterfly whether the volatility is low or high. So I devised this little program here, and it's about a 6-step approach to, based on it, give you nice VIX levels, when to trade, maybe an unbalanced, a balanced, what butterfly to trade, depending on market conditions. And I think this is finally kind of a culmination of bringing all these different butterflies together, because, on the upside, people trade more unbalanced butterflies, downside more balanced. So I think this will give you some more direction if you're looking to become a good craftsman and be consistent in your option trading. And so what I'll do is, what's today? Friday, January 13th. I'm going to tell Johnny, who works with me, through Sunday, right? So that would be the 15th. At midnight, the stroke of midnight. It's 247 for this course, and we'll have it for just through Sunday night. I'll have them go change this, make it 197. I think this would be a big help for you. I think this is one of our best strategies that we trade, and it'll give you some real good direction early in the year here. So just for today through Friday, or through Sunday night, the 247 will go to 197. And the nice thing about all of our on-demand classes, you'll have the class, if you want to send me a email on that, be information on that, you can send me emails if you have questions on it. So, all right, folks, have a nice weekend, a good Martin Luther King holiday on Monday, and take care. Thanks.